Demand globally for silver is continuing to accentuate on that level, on a much higher up level than just the retail, at a time when the exchanges are massively rehypothecated and will lead to a big problem at some point as deliveries, which is really the means by which these countries are pushing back, is standing for delivery, inability to deliver, a force majeure or whatever it is, and bang, just like that, it explodes. So when we talk about what it is, it's, to me, the phrase asymmetrical risk reward comes into mind, and that is super low downside, super high upside. To me, silver is the value of this generation.
Silver stands out as one of the world's most versatile and valued metals, performing the dual roles of a monetary and industrial metal. Historically, second only to gold in monetary value and popularity, silver also serves critical industrial applications, making it indispensable to modern life. It is a key component in jewelry, silverware, coins, solar panels, and electronics, such as cell phones, thanks to its unmatched thermal and electrical conductivity. Its antimicrobial and non-toxic qualities further enhance its utility in medicine and consumer products. Additionally, silver is the best-known reflector of visible light, making it ideal for mirrors, and its malleability and ductility allow it to be shaped into sheets or fine wires. Its photosensitivity plays a vital role in film photography, and its use extends even to defense technologies, with significant quantities employed in missiles and torpedoes. Silver prices often do not reflect the metal's intrinsic and practical value. This disparity raises questions about the market's evaluation of such a multifaceted and irreplaceable resource. Andy Schectman, a well-known bullion dealer and analyst, describes the current state of the precious metals market as being on the verge of a major shift, stating, "It's always darkest just before dawn." He highlights a significant connection between price manipulation by commercial banks and money managers and the ongoing mass accumulation of gold and silver by central banks. Schectman explains that central banks are purchasing hundreds of tons of precious metals each month. At the same time, commercial banks are suppressing prices by maintaining substantial short positions, effectively enabling these central banks to buy at artificially low prices. This coordinated effort has kept the true value of metals like gold and silver hidden from the market. However, Schectman is optimistic that this manipulation is nearing its end. He anticipates a breaking point where these practices will cease, allowing precious metals to reflect their true market values, which he believes will be significantly higher than current levels. This, he asserts, will mark a turning point for investors in gold and silver. Stay tuned as we bring you exclusive clips from Andy Schectman's latest interview with Stacking Surfer. Don't miss his insights on the precious metals market and what could be a transformative moment for gold and silver prices. Make sure to like and share this video, subscribe to the channel, and hit the notification bell so you don't miss any updates. We'd love to hear your thoughts. Drop your comments and observations below. Thanks for watching, and enjoy the video.
Ultimately, the gold and silver argument is still very, very much in play. I wouldn't be nervous at all by the Trump euphoria. I think we should all be thankful that he has won the election, get our country back, at least from the standpoint of our culture, which is just ridiculous. It's been so stupid. It was too stupid to be stupid all along. All the things that we saw that are now changing course, like our glorious president who pardons his criminal son, is just absolutely pathetic. It's everything they've told us has been a lie. Well, we all knew that, but we were all vilified and deplatformed for having the nerve to say it. But it's emblematic of everything they stood for, a bunch of bullshit. And so to get our country back, that's amazing. That's fantastic. But ultimately, in terms of, look, even if we cut a couple trillion off the balance sheet, right? 2 trillion, let's say that the Doge is able to do. Well, you know, you're still running a deficit at that rate of 1 to 2 trillion a year, not the 3 or 4. So Trump leaves office with a 41 or 42 trillion dollar deficit, best case scenario. And that's why the Congressional Budget Office says, look, unless you're going to slash the entitlements that no one will slash, like Social Security, like Medicare, like Medicaid, like the veteran benefits and military pensions and all that kind of stuff. They're not going to touch that. Then, in less than 3 years, or less than 4 years, about 3.5 years, they say that 100% of income tax revenue will go just to pay the interest on the debt and those mandatory entitlements. We're in essence cross that line, and unless you want to create, a depression or literally a revolt, where you remember what the Rodney King riots were like. Well, imagine if all of these people woke up with no food stamps, no entitlements, no welfare checks, no unemployment checks, and you have people with, record credit card debt, lowest amount of savings, record indebtedness across the board, mortgage, auto, school loans, which is the largest asset of a bankrupt government. We're at a place where we're too far down the road unless they want to really create chaos by making those really, really hard decisions that they are not inclined to make. So you're going to see a government that will choose inflation over austerity, and inflation will only get worse, I believe. And so, yeah, gold and silver will have its moment. I think if they do a really bad job of things, you could see gold double digits. I mean, literally, you could see it 10, 12,000 and pegged to a new currency. I'm not saying it's going to happen over time. I'm not saying tomorrow, over time. And I think that's really what ultimately the Fed wants. It will benefit their balance sheet tremendously. If they do a good job, I still think you got Goldman Sachs saying, north of 3,500 by the end of the year. Bank of America saying the same thing. Buy on any weakness. You're hearing from Michael Hartnett at Bank of America. I mean, so I think people are confusing the optimism of having someone who wants to get our country back with the end of the gold and silver bull market. It's not, quite to the contrary. I think it's probably still just beginning, but there might be a little bit of a cooling off period, if you will, through the holidays. So wouldn't be the worst thing to do to sit back and wait, keep some powder dry and wait for that entry point. So, look, I don't have a crystal ball, but I would say that I would expect by the first quarter of next year to see a very strong resumption of the trend in gold and silver going higher. And rightfully so. After people have lived through the nonsense that we have for the last 4 years, I think people are looking a little bit differently at their environment and looking at more of a risk on place, a risk on play in things like crypto and in stocks. But be careful. Markets don't go straight up. Markets don't go straight down. And one that is based on, I wouldn't call it irrational, but certainly exuberance is one to be careful about. So I guess we'll have to see, my man. But look, this is the whole premise of cost averaging, right? So you got money to put into gold and silver. You're not sure how it plays out. The only way to smooth out the uncertainty curve is to, cost average. So if you have $100 to spend, break it into 5 trades at $20, and over a period of time, you will smooth out the uncertainty.
Andy, do you see a sell-off in silver and everyday people because of the continuing increase of inflation? And what I might add to that is, are you seeing more people buying or selling silver? And do they ever give you guys explanations on why they might be selling to you?
Well, I mean, if inflation is going higher, one would think silver would go higher as well. And I think inflation will go higher. So too will the price of silver. So there hasn't been an awful lot of selling. I mean, there is some people usually are somewhat apologetic. I don't find there to be any need to be apologetic. That's what it's there for. I mean, too many people look at gold and silver as only a hedge against chaos, but there could be opportunities, emergencies, or, people have families that need help, kids that are getting married or going to school or need some help or whatever it may be. It's wealth. It's wealth that is there when you need it. If not, you pass it on to your family. But if you need it, you're damn glad you have it. So, but in general, no, there hasn't been a ton of selling. And I do think as inflation goes higher, so as inflation goes higher, you're decreasing the value of the currency. So all things being equal, if you devalue the value of the currency, what Trump wants, and this is what he wants, he's openly admitting it, he wants lower interest rates and a weak dollar. You're going to benefit commodities. You're going to benefit commodities in a big way, and it will reignite a commodity boom after the dust settles. Doesn't mean we're out of the woods by any stretch of the imagination, but no, I think a massive depression, recession, a la slash depression. Well, yeah, then might have some issues with silver selling off, but in the end, no, I think silver's become a strategic metal. It's far more important than people think. It is not an industrial metal. It should be a strategic metal. It has many industrial applications, but has many military applications, which we've talked about, which have been omitted from the supply-demand numbers of the Silver Institute, which show a 4-year structural deficit versus supply and demand. So it's becoming harder to get. There are more uses. The world is accumulating it. China or India just bought 150 or 60 million ounces over the last few months, close to 900 million in the last few years. Russia is now adding it to their strategic stockpile. First country I've ever seen publicly say that. And China is going around the world buying unrefined silver as the second largest producer in the world. I said that to David Morgan in an interview I did with him. And he's like, no, they told me they're the first. That's, who's they, the Chinese mining authorities when he went there. But you have a massive producer of it flying around the world buying unrefined concentrate and doré to bring it home. They're already the largest producer who went from net exporter to net importer. So the demand globally for silver is continuing to accentuate on that level, on a much higher up level than just the retail, at a time when the exchanges are massively rehypothecated and will lead to a big problem at some point as deliveries, which is really the means by which these countries are pushing back, is standing for delivery. Maybe we meet a inability to deliver, a force majeure, or whatever it is, and bang, just like that, it explodes. So when we talk about what it is, it's, to me, the phrase asymmetrical risk reward comes into mind, and that is super low downside, super high upside. To me, silver is the value of this generation in commodities. So I don't see it selling off, and if we do, it won't be very strong. I mean, we keep seeing every time it gets anywhere near the 30 range, it pops right back up. The physical demand is far too strong globally, and what Trump is doing, both with what he wants the currency to look like, and threatening and sanctioning and threatening tariffs on countries that want to enhance their own their own monetary expansion. They want to take their own monetary affairs into their own hands. It will backfire, in my opinion. It's only going to strengthen the resolve of these countries and have them probably double down on their continuing accumulation of things like gold and silver instead of dollars and treasuries.
The Congressional Budget Office, CBO, and financial analysts are increasingly alarmed by the growing share of U.S. tax revenues required to service the national debt. With rising interest rates and a ballooning debt load, interest payments are on track to become one of the fastest-growing components of the federal budget. By the early 2030s, these costs could consume over 30 to 50% of federal revenues, creating immense pressure on other government programs. If interest rates rise faster than expected, or the debt continues to grow unchecked, the fiscal strain could escalate, forcing the government to make hard decisions about spending cuts, tax hikes, or both. Analysts like Andy suggest that these pressures might usher in dramatic measures, such as austerity programs or even discussions of default. According to Andy, this fiscal crunch could pave the way for central bank digital currencies, CBDCs, enabling governments to debase currencies more efficiently, potentially eroding the wealth of the working class. The looming fiscal imbalance raises urgent questions about sustainable policy strategies and the long-term implications for economic stability. Let's get back to Andy's video.
There's a fine line between conspiracy and reality, and I'm just talking out of my ass right now. I don't have anything to substantiate this. Part of me thinks, well, this would be a good way to do it. My whole career, everyone talked about China's numbers on precious metals being, fugazi, that Their numbers stood at 1,200 or so metric tons for year after year after year after year, no increase. And it's widely known that they're the largest producers in the world, that they have been, according to my good friend Bill Holter, producing between 300 and 500 metric tons a year for 25 plus years, using the trade imbalance that they had gained from us buying party favors and trinkets from them to mine gold, even that was uneconomical. Alistair McLeod will tell you that, look, they've been promoting gold ownership through their citizens for years and telling them, buy it, buy it, buy it. He'll tell you that 2 years ago that they had 38,000 metric tons, which would be 5 times what the U.S. supposedly has, although that hasn't been audited since 1953 or so. But that when you add all of the production, I've talked about on your show how they're flying around the world buying gold and silver concentrate and doré from the miners directly, disintermediating the market and the bullion banks, and it's much more opaque. It doesn't come off the exchange. No one really knows how much they're getting, and then bringing it back to China to refine it. They've gone to great lengths to conceal how much they have, and if they've been telling us, the world, that they only have 25 or 2,600 metric tons, I call bullshit. And what better way to do it than come out and say, yeah, we just found 85 billion worth of gold, and now in a few years update their numbers. Maybe they really did find it, but I do know that gold is very important to them, and whether it be the United States or China, neither have a vested interest really in disclosing just how much gold they have. They lied for a few months recently, said that they haven't been accumulating it, yet the import-export numbers betray that and say, no, yes, you have, and they're just doing it a different way. When the PBOC buys refined gold, it's supposed to be reported to the IMF, but if the PLA, the People's Liberation Army, who has probably as much gold as the PBOC, buys it, well, they don't. If a proxy bank, like one of the bullion banks or one of the commercial banks in China, decide to buy it on behalf of the PBOC, or a sovereign wealth fund buys it on behalf of them, that's not getting reported either. When gold that is, or silver, both that are purchased directly from the miners, it's not pure, is purchased, that doesn't have to be reported either. So yeah, I think it might have happened and it might not have happened. Either way, it will find its way into the, it will give reason, or they could say it's even bigger than we thought. And here are our official gold holdings. Now we actually have, 40,000 metric tons. How do you like that? Isn't that crazy? Well, that would be a way for them to kind of open up the coffers and no, we haven't been lying to you. We just mined all this over the last few years. So who knows? And if we go to a world where there is a backing, like the unit currency, if it ever comes out, was purported to be, according to Delma Rousseff, agreed to in principle, backed 40% by gold. That's what the Swiss used to use, a 40% gold backing, not 100%, 40%, which gives you monetary latitude as the central bank has the ability to enact monetary policy. A 40% gold backing would be just about right. So you marry, blockchain and gold, Cynthia Loomis talking about revaluing gold, the senator from Wyoming, the head of the Dutch National Bank, talk about revaluing gold. Our Scott Bessent, the new Treasury Secretary under Trump, his largest holding is gold. She wants to issue treasury bonds that will be collared by gold so that, you pay less of a coupon rate, but it's redeemable in gold in the end. So I think it's in the vested interest of these countries, knowing that there's a likelihood perhaps that the only other tier 1 reserve asset in the world, why the hell else would they have reclassified it as the only other tier 1? How about Bitcoin or a special drawing rights or something else? No, it's gold, that it will have a role monetarily in the future. So why tell everyone how much you have? In fact, what they're doing is exploiting the idiocy of the West and our suppression of the paper markets to drain the global coffers. So you don't want everyone to know that you're copiously accumulating it every way you can through the PLC or PLA, through the PBOC, through sovereign wealth funds, going to the miners, draining the exchanges, however you're. And in a world where information travels at the speed of light, that's the last thing you want to do. So it's look over here while we do this, and we say one thing and do another. Misdirection, it's taught in every major business school on corporate hierarchy. It's taught in law schools on formulating arguments. It's mandatory reading at West Point and CIA. Misdirection is exactly what is happening around the globe, and as it pertains to strategic assets. So I think that the numbers are much bigger than we are led to believe.
Bank of America is urging traders and central banks to expand their gold holdings as the U.S. grapples with increasing risks from surging debt levels. In its latest report, the bank emphasizes that as treasuries face mounting pressure, gold is solidifying its position as the ultimate safe haven asset. The report notes, gold looks to be the last safe haven asset standing, incentivizing traders, including central banks, to increase exposure. Bank of America predicts gold could reach $3,000 per ounce, an 11% rise from current levels. This projection is tied to growing concerns over the unsustainable U.S. debt trajectory and rising interest payments, which are set to claim a greater share of GDP. Analysts highlight that as markets potentially hesitate to absorb higher debt levels, coupled with increased volatility, gold is likely to become the asset of choice. With limited fiscal discipline expected during the election season, the U.S. debt could hit unprecedented levels, exacerbating the problem. The strategists conclude with a stark warning. Ultimately, something has to give. If markets become reluctant to absorb all the debt and volatility increases, gold may become the asset of choice. This outlook underscores the growing allure of gold in a volatile economic landscape, reinforcing its role as a critical hedge against instability. Do you think that the next era of global economics and geopolitics will be really favorable for gold and silver investors? Please leave your comments and observations in the comments section below, hit the like button, and subscribe for more videos. All of these actions help boost the YouTube algorithm so our videos can reach more metals investors. Thanks for the support.